All right. So business credit, right? One of the biggest mistakes that we identify and we see is number one, of course, your recent derogatories, late collection charge-offs, very similar to your personal credit and everything that that we go through. It also can show up on the business side, right? Same questions: is it open or closed? Is it age derogatory? Is it seasoned, or is it still there? Now, if you have late, right? Very different from your personal credit where you have, that 30-day buffer of paying your bill before it goes into a 30-day late on your credit report. With business credit, the creditor can report it if it's 1 day past the due date. So if you don't have it on auto pay, right, that's going to kill you. I'm going to show you an example of a business credit report and how that can affect you, from that. Vendor credit also applies. We had actually one of our Radikal clients that had literally, they just hit their 2-year mark. He had an 800 personal credit score, $1.3 million in business credit. I coached him on what to put on his net income so that he paid less taxes but still qualify for the banks. We literally potentially had about a $400,000 to $500,000 run, for him. But because he was in the construction business and part of the whole way of paying certain vendors a little bit late, it was part of the whole, like, it was just a common thing. Well, that situation with the vendor credit had a 30 or 60-day late, which literally killed 90% of his apps. Everything else was perfect. So it's very important, guys, to make sure that you pay your vendor credit and your creditors on time, especially not even 1 day late, from that. We still were able to get him 120,000, but again, a potential of 100,000 versus 400, right? You do the difference here. So what do you do if you do have some bad, elements on your business credit? Number one, you can attempt to dispute it. I would say that business credit is kind of like the wild, wild west. There is no, the FCRA rules don't apply as it does with business. Anybody can pull anybody's business credit anytime. So you can attempt to dispute it, but again, you're not governed by the same rules, so it does make it harder. Hence why there's not a lot of credit repair companies for business out there. Number two, another strategy is to be able to let that derogatory season. Okay, in that last example I told you with the construction company, right? Maybe a year or 2 years later, and he's been paying on time. That's not being habitual, and late. And a lender might be able to figure that, just because lenders do understand that things do happen. If you look at the overall picture, but again, these times in this recession, it becomes harder. It's very different from a late or a charge off. One strategy is starting a new company or an aged corp to bypass it. If you have a charge off that's tax liens, public records, too many UCCs, MCAs, these are all certain things that you can then divert all your accounts and cash flow to a new or an aged corp, and you build up 3 months of business bank statements, and you're just diverting that traffic and setting it up. Remember, your website can stay the same, just the entity could be the difference, right? My company's called Deliver Capital. That's just the website. The corporate entity is Axel One Holdings. So if tomorrow I want to switch that over to something else, it's not going to affect my branding, right? It's a little bit more advanced, but again, if there's a will, there's a way, right? Just like my dad said. If you don't want to do it yourself, a dispute, literally, this is the only company that I was able to research online that does some of a business credit repair. I don't endorse them. I don't know them. I haven't worked with them, so I want to be able to put that up front. But I did have a client that I did refer because it was getting him some denials, and he said it was anywhere from $3,000 to $5,000 to have them work on it. Again, I don't know, but again, I just wanted to provide the only resource that I know that does exist if you don't want if you don't want to do it yourself. And just like your personal credit, your business credit has something similar, right? Like a boat taking on the water, high credit utilization is like a signals of a sinking financial ship. And so, and I'm going to show you an example of how that can affect you through a business credit report here very momentarily. But even though you have some flexibility with your business credit, having maxed out business cards can also result in denials, right? The revolving family of high credit usage, those are all certain things that can, shy away, have a lender shy away from an approval. So a little pro tip, obtain business credit cards from all the bureaus, right? Not all trade lines report. It's not like personal credit. So if you know the rules of the game before you play, then you have a higher chance of winning, right? Wouldn't you agree? So if you know that, hey, my Experian is maxed out, it's, there's lates, collections, whatever it is, it's just, it's toast. But there's a whole bunch of banks that will only pull Equifax, and they're not going to look at Experian. So choose the banks that are only going to look, if you look at the strength of your business credit reports, could be Dun& Bradstreet, could be Equifax or Experian, then you want to choose the banks that are going to be only pulling those lenders. That way you can bypass whatever derogatory in any other bureaus. Does that make sense, guys? Type of one, if you found that useful on how to bypass anything that goes wrong with your business credit, if you've been able to really identify what that is. Your business has inquiries being reported as well. Okay. And having too many business inquiries can also be one factor of a denial. It's not as common, I would say, as personal, but it is something just to be conscious of. Okay. So let me go ahead and I pulled this from a client of how an Experian business credit report looks like. And you can see, right, the normal address, who the clients are, I mean, who the borrowers are, or the principals, how long they've been in business, all the normal stuff here. But you can see that there is a medium risk at this point with a 48 score, right? Financial stability looks great, but the business credit score is a little bit off. And you can see here the lender consortium risk rating is around a 3. Now, like I said, what happened here? So there's a few different trends that we're looking at. Business score, business scoring worse, right? 47%. There's no bankruptcies, anything as such. So you can see that up to 30 days, remember I told you, a late can happen between day 1 to 30. And for whatever reasons, maybe it was auto pay, whatever the excuse is, but this really, really hurt me. It's actually that 48 was actually at a 12 a few months ago, and it's been creeping back up. But you can see that at December 2023, that 2%, that one late, caused a major, major issue here, right? 623 was the second one. So for one reason, small payments, something happened, those things can really make a big difference. Now we have to let this person age a little bit, or have to dispute it in some form or fashion there. Now, here's another thing that I want you guys to be very conscious of. So you can see how the balance, the credit limit and the balance is currently maxed out. Now, that's not the true limit. This is more closer to the 100,000 or 75,000, but the bank is reporting the limit as the same as the balance. That's showing 100% credit utilization. That's not correct. So we have to dispute and fight that, either sending in a valid bank statement or a credit card statement, whatever statement the person has, to be able to correct that from the bureaus. But that is hurting him in his fundability. So from the lates, right, I just wanted to show you this number of inquiries. If you've been going crazy all in the short period, it will show here. So you have to, do your round, let your file rest, just like personal and your business at the same point. This is a game it's a journey, it's not a race. And so all these different factors can be contributing to an approval or a denial, right? And certain banks are a little stricter and some banks aren't. And that's the art between knowing where to go that makes a difference. I want to also provide an example of a UCC filings. So those MCAs, they're going to file a UCC. Even if you have and I'm going to go in depth with this most likely next week, of UCCs and how they work and the mechanics of all of that. But there's certain ones like an equipment, which is collateralized by a certain asset, which it's okay to have. You can have a few of those because it's separated. When you have these MCAs, which is unsecured, that makes it a little more difficult. Your SBAs will be a UCC1, which typically can blanket all of your assets. Or if you have an accounts receivable factoring or purchase order factoring lines, those also can be UCC1s. Which what that means in a blanketed UCC, that it'll be very difficult for any other bank to go in second position, because nobody wants to be in second position, right? So just like a mortgage, you have your first mortgage, maybe you took out a second, like a HELOC. It'd be very difficult for a lender to go on third position, because if you foreclose, there'll be the third one in line to get their money back, right? That's what a UCC does. It protects that asset. Does that make sense? So learning and understanding your business credit report can be very instrumental in how you structure your lenders. All right. Business mistakes on corporate compliance. Not having your Secretary of State in good standings, guys. It's a very common one. You know, it could be as little as not filing your statement of information. One piece of document, right? There, you know, every year you have to pay an annual fee for your state. Every state's a little bit different, but that can put you into a not good stand. Now, this is an old one, of course, but I wanted to provide, you know, forfeited, terminated, suspended, or active. You want to be in the active state. All this needs to be in good standings, because you can get denied if any of these are not in good standings. All right, so the way to check is to go to your Google search. You can type in, you know, Florida, you know, Secretary of State in Florida business search. Type in your company name. Once you go into it, you're going to do the business search. Type in your company name. You're going to see something similar to what I just showed you, and that will help with understanding if you're in good standings. You know, a little pro tip here is that if you're adding a credit partner, part of the utilization hack, then it's recommended that you add them either as an officer to your corp. Doesn't mean that you have to give them ownership. You don't have to say I'm signing up the whole entire, you know, company. But again, having them as a credit partner, as an officer, like I can hire a CEO and give him zero equity in my company, but pay him a salary to run the company. Right? There's many ways. Doesn't mean just because you're a CEO doesn't mean you have to have ownership, you know, from that. There's ways around the whole thing. So having your Secretary of State updated will increase your chances if you're doing the credit partner hack. Does that make sense? All right, updating your business info. If you went from, as you know, you're a solopreneur, your home address, your cell phone, you need to update all information, your Secretary of State, your IRS, your bank statements, your business credit bureaus. Everything should match to be able to increase your chances of an approval if you had change in address, a phone number, website, emails, etc. Okay, so make sure that you do that because they all have to be in sync